I think what people really just are still struggling with is this transition, right? TradFi, CeFi, DeFi. And this is a move toward DeFi, clearly, and that's a good thing. But people just are still stuck on this, no, exchanges are bad and not your keys, not your coins. Like, please stop.
Mark Yusko is an investment professional and hedge fund manager from the United States. He established Morgan Creek Capital Management and currently serves as its founder, chief investment officer, and managing director. Before going further, make sure to hit the subscribe button to stay up to date with our latest videos. The cryptocurrency exchange Coinbase has announced the deployment of Base and Ether Layer 2 scaling network after developers launched the Base testnet on Thursday. The company said it is incubating Base within Coinbase and that the L2 chain will progressively decentralize over time. Base will progress from a Stage 0 to Stage 1 rollup in 2023 and a Stage 2 rollup in 2024. After the Coinbase announcement, the native token of the L2 scaling network Optimism OP rose 7.4% against the US dollar. Optimism has recently revealed its plans to upgrade its network in March. Coinbase would allow developers to directly integrate their product with Base and provide fiat on-ramps targeting an estimated 110 million verified users and $80 billion in assets on the platform in the Coinbase ecosystem.
The thing I'm super excited about Coinbase is this decision, as you said, to go with Base and to not try to create their own L1 like all these other, exchanges that have met an ugly demise. To make an endorsement, it's not exactly an endorsement, but in essence, it's an endorsement of Ethereum as a layer one.
Endorsement, I think.
Yeah. I mean, I think it is.
Yeah.
I don't want to be too over-promissory here, right? Because, if I use a rocket emoji or a cash tag or something, I'm in trouble. But a cash bag. But I think it's really interesting. And if you asked people, how's the market, the equity markets over the last month? Everybody's, they're up a lot. They're not. They were up a lot the first couple weeks, and now they're kind of downish to flattish. The Dow is actually flat for the year.
Yeah.
Nasdaq's still up a decent amount, but it's basically flat for the last month. And I think there's a pretty big yin and yang going on between realities of economic data and narratives of no landing. And I did the podcast with Rosie a couple weeks ago, and he was just going off on no landing. That's just it's insane. Can they not read their own data? No, I mean, they can, but they're choosing not to. Yep. And they're crafting a narrative that suits their, objectives. And narratives are crazy. And I'm just all about, I think data is better than narratives. And the data, it's not really good.
On Twitter, Coinbase stated, Base is an Ether L2 that offers a secure, low-cost, developer-friendly way for anyone, anywhere to build decentralized apps. Our goal with Base is to make on-chain the next online and onboard 1 billion plus users into the crypto economy. The cryptocurrency exchange explained that Base will be open source and will leverage Optimism's OpStack. Coinbase detailed it is also collaborating with Optimism. We see this toolkit as an open platform that anyone can contribute to, fork, and extend to help the crypto economy scale. Crypto exchange Coinbase launched Base, a Layer 2 network built using Optimism's OpStack to attract millions of new crypto users in the coming years.
You released the oil from the SPR, you count it again. Okay, great. And then you had a little bit of the fake, I call it the fake retail sales, which is prices are higher, so you're spending more. Is that really GDP? I mean, I guess technically it is, but I don't like that. So look, I think, consensus for Q1 is 0. GDP now has some big number like 2.5. Atlanta Fed is I would say more accurate than the consensus, but they're not infallible. I would take the under on that 2.5, but we'll see. And ultimately, this idea of no landing to me is kind of silly, right? Because no landing implies that we're still at 30,000 feet cruising along in the air. That's clearly not the case. This is not a perfect economy. We had a year-over-year change in GDP last year of 0.9. That is stall speed, right? That is below the natural rate of growth, which is around 2%. So that is definitionally a recession. Now, they're not going to call it a recession because of the fake jobs numbers. Negative, right? Hadn't been negative for almost 100 years, for 96 years. It's pretty incredible when you think about it. 96 years straight of increasing the money supply. But that leads economic activity by 16 months. So you're going to have a downturn, and inflation is going to moderate. And the shelter component of inflation is collapsing. So that's all going to moderate. And I don't think it's going to go negative and deflationary, but it's going to moderate.
U.S. output is on track to decline slightly in the first 3 months of this year, slipping 0.6%. This median estimate, if correct, will mark the first decline in GDP after 2 straight quarters of growth. Inflation is starting to tick down, but we are not on top of the inflation challenge yet. There is more work to be done to tackle inflation, and that comes with risks. In early February, the U.S. Central Bank raised its benchmark interest rate by 0.25 percentage point and gave little indication it is nearing the end of this hiking cycle. It's still early in the quarter for economic data, and so today's estimate should be viewed cautiously. But the slide in today's median nowcast from the previous estimate on February 8 suggests that the incoming numbers are weak relative to results in last year's Q3 and Q4. Yet, a number of other indicators still highlight elevated recession risk for the U.S.
Looked like U.S. liquidity was expanding, but then it contracted. Well, then how is global liquidity suddenly? Well, it's because, and you see this in currencies, it's because I believe there is a concerted collaboration, right? That these central bankers get together, and it's a process of saying, okay, Europe, ECB, you're going to have the strong currency, so the rest of us can devalue our currencies and be mercantilist and sell a lot of stuff globally. All right. So you're in the hot box for the next 9 months. Then we'll get together again. And now you, Japan, you're in the hot box, or you, the US. Last year was the US's turn, right? The US had to have the strong currency so the euro could be super weak, because Europe was on the verge of collapse. Yeah. Remember all the dire things about in Europe? European stocks have crushed it because they were able to devalue and sell a bunch of stuff, machine tools and cars, that they wouldn't have otherwise been able to sell because China was closed.
Last month, the American S&P 500 jumped 7%, supposedly because investors started to think that lower inflation rates would slow Federal Reserve rate rises. However, U.S. equity markets suffered their biggest fall for 2 months as strong economic data sparked a welter of market chatter about the prospect of more tightening from the Fed. The end of quantitative easing from the Federal Reserve is the big liquidity source and is now being pulled back as the Fed reduces its more than $8 trillion balance sheet by nearly $100 billion per month. The implications are higher interest rates and scarce cash, which could put pressure on long-duration assets like unprofitable growth stocks, the same stocks that have soared so far in 2023. What are your thoughts about Coinbase's Layer 2 launch and global liquidity cycle performance in 2023? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.